Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here again with your top 3 points of the week. Now, like we mentioned on last week's video, it's all about earnings this week as earnings season got kicked off. So, without further ado, let's dive right into 3 companies that went ahead and reported this week. Kicking us off at number 3, it's JP Morgan, which posted a strong, solid Q2 results, beating especially on their trading activity and their investment banking fees, due a little bit in part to the increased volatility that we've seen in the markets this year because of the ongoing trade policy turmoil. In addition to that, CEO Jamie Dimon did come out and say that they are starting to catch some momentum in their deal-making activity. However, he did stress that there's some caution to be had there with the ongoing tariff uncertainty and trade policy dynamics still at play here in the overall economy. At number 2 is United Airlines rallying after posting a better than expected outlook. United went ahead and narrowed their forward-looking guidance. You might remember that in Q1, they offered actually dual forecasts. So they gave one towards a more recessionary type environment and one towards a more normalized environment, given the ongoing, like we keep saying, tariff policy and trade dynamics going on. That kind of leads to very wide ranges as to what investors can expect and what other companies can expect performance to be like. So the fact that they are now narrowing it, having a better sense as to where they think that their operations can go, is a very big plus for the airline and other carriers. On top of that, they also pointed out that their Newark airport hub, so obviously Newark International Airport, is one of United's major hubs. They had run into some disruptions earlier this year. They are starting to work themselves out, and they like the forward-looking aspect on how the operations of Newark are developing there. So that will help obviously increase their margins, as so much of their traffic flow, especially international travel, is dependent through Newark. And United has pointed out that really it's travel demand, business travel demand specifically, that has really been a turnaround for the company. And obviously there's a lot of international travel and premium going through Newark. And then finally, point number 1, it's Netflix beating earnings yet again. They beat pretty much on every major metric. In addition to that, they also raised their forward-looking sales and profit guidance on top of that. It's another quarter. It's another beat for Netflix. On top of that, they do feel confident going forward into the second half of the year. They can continue to steal customers from other competitors, namely because their content slate in the second half is going to have some very marquee names like the final seasons of Stranger Things, as well as Happy Gilmore 2 coming out just this month. So a lot of momentum going for Netflix right now, still the dominant player in the streaming platform space right now. So that does it for your top 3 names that reported this week. What are we looking to for next week? Well, you can probably guess once again for next week, it's going to be more earnings. We're only at the tip of the iceberg right now. So as these continue to develop and we get those marquee names, the Microsofts, the Apples, the Googles, we'll keep you posted here and keep you informed. But as always, if you have additional questions, please reach out to your financial advisor or dig into the written week in review. And if you do not have a financial advisor and you want to talk to one, please follow our link and we'll get you connected with somebody. But as always, please make sure to go out, enjoy your weekend, and we will see you the same time next week. Thanks again.